In this video, we'll go over how to read the price action chart correctly, because the market is moved by institutions, big hedge fund managers, central banks, all these big players, and they know what they're doing. And the only thing as a retail traders that we can do is we can follow their footprints. We cannot move the market. Few contracts that we trade, or few lot sizes or shares, they cannot possibly move the market. So only thing we're doing, we're following the institutions. And in this video, I'm going to show you how to read the chart correctly. And I'm well aware this is hindsight, but remember guys, first you need to learn to see these things happen after the fact, and then you will train your eyes to see it live. All the things that I'm describing is exactly what's going through my mind when I'm trading live. You've seen plenty of my live videos, and this is exactly what's going through my mind. So the first thing we need to do when we are starting trading, and I started trading somewhere around this area, and this is where the market opened, 15:30 market opened somewhere around here. I started trading like hour and a half hour before the market opened. The first thing I have to do, I have to analyze the market structure, what happened before, because what happened on the left side of the chart is very important to what's going to follow. And we have a downtrend. Prices are below EMA. We're making lower highs, lower lows. So the first thing I want to do, I want to find the proper channel. Not only because trend line is a key entry point where high probability setups occur, but also I want to know where the break is, because according to trend line rules, after price will break the trend line, we will not be looking for a reversal just yet. Price will attempt to make a new extreme. So we have a break right here, and price has created a new extreme right here. We actually have a two-legged move to the key entry point, to the EMA, and two-legged pullback is a high probability setup at the key entry point. But this is still too early, not enterable trade. And I want to mention just quickly, it was fairly easy to find this downtrend because there was no price action prior to this, either to the upside or to the downside. So we weren't forced to look for bigger pattern. This is just a shortened trend line down, and you don't need to find some sort of bigger pattern. This is a shortened channel. We have a break and a new extreme. According to price action rules, after price will create a new low, a new extreme, the price will either straight up reverse or go into correction. And true to its form, prices went into this correction. And notice how we are no longer interested in going short, even though it may look like we're still below EMA and we are going lower. We're not interested in going short, even though this nice second entry short is still a potential setup because it is at the key entry point, and generally you will make a two legs to a new extreme. The downtrend already played out. This is not one of those big days where you have 45-degree strong downtrend. This is a very short-term break, new low, and the market pushed strongly above the EMA. And this is very important since the downtrend played out, and this is such a strong move up. This is indicating that a lot of buyers who are buying right here are serious, really in their convictions. Okay. Because we push strongly above EMA, so the momentum is changing. And prices then went into this consolidation. And remember, if you trend into the trending range higher, you're most likely going to break to the upside. And if you trade into trending range down, you're most likely going to break to the downside. Now, this is an uptrend right now because the downtrend played out and we're pushing strongly above the EMA. Now, when we are in an uptrend, we are looking for high probability setups, and that will be second entries at the key entry points or failed second entries against the trend. And this is what I played today. We have the new low right here, first entry short, we push strongly above EMA, second entry short, failure. I treated it as a failed second entry short, I put my limit order in, and I got stopped out, and market instantly went to the opposite direction. And was I frustrated? Was I anxious? Did I get riled up? Absolutely not, because this setup will work 8 or 9 times out of 10. This was just the one instance that it didn't happen. That's okay. Nothing is perfect in price action. You're going to have losing trades. That's always going to happen. This is just a normal part of trading. So with me not getting riled up and not getting too stressed out, I was able to re-enter right here. New high, first entry long, second entry long. Fourth confirmation of this trend line. We are in an uptrend. So I re-entered right here and I caught a runner. So you have to remember, this is the key why you have to stay so level-headed. You have to be calm, cool, collected. You cannot get riled up by losing trades, because had I been overthinking this loss, I probably would have been able to enter on this trade. My head would be full of probably rage that I get stopped out here, but after the years of experience, that's completely normal. And I just want to emphasize that I was 1-to-1 here. I was 50, my win percentage was 50% here, and I exited my runner somewhere around here because I wanted to cover the losing trade quickly, and I didn't let the runner run, unfortunately. I was up $337.50. my win percentage is 50% and I was up $337. This is what happens when you have a proper money management. I scalped out at 10 ticks because the scalp is my main portion, 3 contracts and at 10 ticks, and I left my 1 contract scaled out for runner because I don't want to leave money on the tables in case market rolls up higher. This is how you can maximize your money management. This is how you can milk it absolutely to the last drop, because we scalp out our main portion and we leave 1 contract as a runner. This is why you just don't want to swing, or you just don't want to scalp. You want to divide your contracts. You want to take partial profits. It will be much better for your psyche, and you will just maximize your potential completely like this. As the market is moving higher, we just break higher, we pull back, and this is a breakout pullback pattern. I was really tempting to mark this trade right here because we are in an uptrend. This 2-tier channel is definitely now working higher, but I was really hoping to get a 1 tick lower and then push higher. I wanted to first entry long, pull back, second entry long, and confirm the EMA. But since it didn't happen, this is fairly aggressive trade, and I know a lot of you took this trade, but this is a little bit aggressive. But I really want to see the second entry long when I'm trading the breakout pullback, or I really want to see the 2 key entry points, which got confirmed. Trendline and EMA are holding right here, but since it's just the first entry, it is a fairly aggressive. But remember, market is now moving higher, so you have to draw this trend line, and look how nicely it fits. So since you have this trend line working higher and EMA is pointing higher and prices are above the EMA, 2-tier channel is valid and the shortened trend line is valid. You want to take the second entries at the key entry point, and unfortunately you don't get second entries. You could just get a bunch of first entries. You have a first entry long, pullback, little pullback, but the second entry long is already new high. You're working higher. Since my runner got stopped out here because I exited, I took the profits. This is where I took my second trade, and my last trade for the day. I was 2-1 for the day because new high right here, first entry long, pullback, trend line is holding prices, and a second entry long, big bullish bar. It is starting to get a little bit more dangerous since you're getting closer to these highs and you already moved a bunch. The only thing that is strong here is that the trend line was confirmed so many times. This is like a 7th touch of this trend line. This is why I felt confident in this trade. Normally I wouldn't take the trade, so high up when you're so close to these highs, but since the trend line was holding so nicely, and this is a second entry long, this is a good trade at the key entry point, and market pushed higher, scalped out, and my runner got stopped out here, unfortunately. And this is where my first runner initial would get stopped out, because I normally trail the stop loss 1 tick below the signal bar. But hopefully you understand that the downtrend played out with a break and a new low. We pushed strongly above the EMA. We went into a little bit of a trading range, and the trading range developed a larger pattern, and now we are working higher in this 2-tier strong uptrend. Now we have a little bit of overshoot, and overshoot will a lot of times lead to break of a trend line. And take a look, guys, how the trend is changing, but this is just a shortened trend. Even though this is a shortened trend inside of this bigger channel, we still need to respect the shortened downtrend. This is a now massive move down. We're below EMA, so we have to draw this trend line because you want to follow the trend line rules. Prices broke the trend line, pulled back, and you don't want to go long just yet. This bigger channel just broke too, so you have 2 conflicting beliefs. You're waiting for a new high of this bigger channel, and you're also waiting for a new low of the shortened channel. So what you're going to do, the first thing you're going to do is you're going to wait for prices to push above the EMA. Okay, this is happening because remember, the bigger channel is always more important and takes precedence. So prices pushed above the EMA, but it instantly turned down lower and just created a first entry short. Now the only way you can go long is if you have a first entry short, second entry short failure. If you get a reversal pattern, that's the only way you want to go long, that you are sure that the uptrend is stronger than the shortened downtrend. But in this instance, it didn't happen. You pushed above the EMA and instantly turned down. So this is a good indication that you should be focusing more on this downtrend, because you now have two conflicting patterns working, and if you're unsure which pattern is working, the shortened one is right now winning because you pull back lower below EMA. You have a new high right here, first entry long, pull back, second entry long right here below the EMA. And this is now against the trend because The trend now is down. You could have re-entered on this failed second entry long below the EMA, below this bearish bar, but safer entry is wait for this first entry short, pull back, second entry short, because even though the downtrend is right now winning, this was such a strong uptrend. I was still a little bit hesitant to pull the trigger right here, even though I'm going to market because it is a failed second entry long. I don't know why I'm too hesitant below the EMA. But once you get the second entry short right here, and it is still part of the first entry long, second entry long, and EMA is holding prices, now you have the move to a new extreme. So the downtrend played out. With the break and a new low. So right now, all I'm thinking is for reasons to go long, because the bigger channel is still waiting for a new high, and we're still working to get a new high, but we didn't. We're still working for a new high. We push strongly above EMA. Okay. We have a first entry short, failure, pullback, second entry short, and the second entry short kept winning. And I was looking for the same thing I was looking right here. I was looking for a reversal pattern. Failed second entry short above the EMA and hoping to jump on board to go long, but it didn't happen. Instead, we pushed below EMA, and you don't want to go long once you push once again below EMA. You're in the middle of right now this mess, and you get a short-term downtrend, you have a break and a new low, and we ended up having two legs to a new extreme, which I honestly didn't expect that this short-term downtrend could produce first leg pullback, second leg to a new extreme. I was quite sure, and this is why you can never trade the market you want. You always have to trade the market you get. I was really expecting for market to create a new high, but since market pushed lower, you created a triple bottom. You have a double top right here. This is clearly a trading range, so you don't want to sell the highs. You don't want to buy. You don't want to sell the lows. You don't want to buy the highs. You want to do the opposite: buy the lows and sell the highs, especially buy the lows, since the bias is still up. We're still waiting for a new high of this uptrend, and prices push strongly. You have the short-term trend line. You have a break, and you have first leg, first entry long, pullback, second entry long right here, and you want to enter. You don't want to enter above this doji. You want to enter because this is a second entry long now. Hold on. You want to enter above this bullish bar, which closed above the EMA. So you have a two-legged pullback. You have a break and a new low, so the downtrend ended. This trend line is waiting for a new high, plus the overall trend is waiting for a new high, and you got room to this resistance. So this is a nice two-legged pullback at the EMA, high probability setup. And this trading range is starting to take precedence, and we may not even get a new extreme, it looks like, because it is Friday. There's not enough steam left, and we just may chop into the weekend. So this was the bigger picture. Hopefully it makes sense how the market moves. You want to find the trend lines. You want to look for the breaks and new lows. And this was fairly obvious. This was textbook price action. Downtrend, break, new low, correction, strong move up, change of trend, and the bigger pattern developed of these few swings. Third swing confirmed it, fourth swing, and then prices are working above the EMA, and you want to wait for two-legged pullbacks at the key entry point. And this was probably tricky because I get this question all the time. What do you do when you have the short-term downtrend and at this bigger uptrend working higher? Do you sell or do you buy? The first thing, you buy if you push above the EMA holds prices and there is a reversal pattern. But in this instance, you pull back below the EMA. So this told you that a lot of sellers are stronger, and first entry long, second entry long, failure, EMA is holding prices. So hopefully you guys had a great trading day. Hopefully I wasn't too rambling. Just want to point out how profitable you can get with the proper money management system, because I was 50% here. I ended up being 2-1 for the day, but you can be just 1-1, have one winner, one loser. If you have proper management system, you can still make money. And this is the important lesson that I want you guys to take from today, and also not get riled up by losing trades. So I'm going to wrap it up. Take care, everybody, and have a safe weekend.